What's up, everybody, and welcome to the BitLab Academy Alpha Series here on BitBoy Crypto. Thank you to the Bit Squad for hosting us on this channel. We're going to be sharing about 15 or 20 minutes of a topic that I'm talking today in this episode with Dr. Jeff Ross of Vailshire Capital. But before we get into that, I want to let you know you can watch the full episode on BitLab Academy, which is at youtube.com/@BitLab Academy. So without dragging out the long intro, without doing all that, let's just jump right in because we want to make sure that we bring you meaningful data that could be a meaningful tool and an asset to all of your trading in this digital asset ecosystem. So without any further ado, how are you doing, Dr. Jeff Ross?
Hey, Kellam, I'm doing great, man. Thanks for having me on your show.
I'm thrilled to have you on. You know, you and I have spoken a few times on Twitter Spaces, and it's always been, I've always had such a big respect for the thoughts you bring to the table, and also the fact that you have a foot a little bit in both sides of the market, the traditional finance side, as well as the digital asset ecosystem. And I think you'll agree with me. Far too many people on both sides of the fence. It's kind of like, it's almost like a political spectrum in finance. People are very tribal, whether it's TradFi or digital asset. And then even when you go deeper into the digital asset ecosystem, there's people that are absolute maximalists with Bitcoin, and other people that are absolute maximalists with an altcoin you've never heard of. And they may not have even looked at the other assets you're presenting them. So I want to say first, thank you for bringing so much to the ecosystem that you do. And, you know, with that being said, the markets are all over the place right now. Of course, we've got a little bit of a huge push in the narrative and the sentiment right now that's kind of been fueled and funneled in by BlackRock ETF application, not approval. And everybody needs to realize that. So what do you make of where we're at right now? And how do you contend with this still sort of overshadowing sort of bearishness that feels like it's looming, with people looking specifically at the trends of recessions that could come and how that could impact Bitcoin?
That
was a heavy question. I apologize.
It was. I'll try to remember it and hit your salient details here. So let's start with the good news first. So with BlackRock submitting an application, and to your point, it's just an application. Nothing has been approved yet. I think it's a big deal, though, from a narrative standpoint. Why is that? It's because Larry Fink has been one of the largest adversaries to Bitcoin and towards this entire, digital asset space for years and years and years, right? And so what this says to me, and first of all, I want to make very clear, Larry Fink is not a good guy. He's not, and he may not be a bad guy, but he's not doing this out of the goodness of his heart, right?
You're saying is that clip yesterday of him on his little PR tour, obviously supporting the asset that he has an application out to have a spot ETF on, where he says BlackRock is about hope. You don't agree with that?
Yeah, I do not believe that. No, he is a salesman, right? He is a marketer, extreme. He's a professional. What does he do? Like other people of his ilk, he creates financial products that people want to buy. And so what this says to me, Bitcoin is this ground up movement. Everything else in Wall Street, and I come from Wall Street, obviously, as a fund manager and a RIA, everything else in Wall Street is basically a top down approach. Like, we are creating this and we are disseminating it to the people and we'll profit from it. Bitcoin is this ground up movement. And so what's happening at BlackRock and all of these other huge brokerage houses is the customers are saying, I want to invest in Bitcoin. I want to invest in Bitcoin. Like, how can you make it easy for me to invest in Bitcoin? Why don't you get the spot ETF going? Blah, blah, blah. And because of that, he is saying, look, we need to create a product that the people want. What they want is a spot Bitcoin ETF. It's slightly different. Technically, it's an open-ended trust fund, basically, but it functions basically like an ETF. And so that's why he's doing it. He's not doing that because he's a good guy. He's doing that because he wants to make a ton of money off of this product, and BlackRock will make a ton of money off of this product if it gets approved. So that's the good news, right? And why is that good? Mostly because the boomers love Larry Fink and BlackRock, and they love old Wall Street people, right? They love Warren Buffett and Charlie Munger and James Dimon, all these guys, Jamie Dimon said James, Jamie Dimon, all these old guys, right, that are billionaires, and that they tell the rest of the people what to believe, and the boomers all nod their heads when Larry Fink or Jamie Dimon or Warren Buffett says something. And so just the fact that Larry Fink now, who has been really, anti-Bitcoin because it wastes energy and it's killing the environment and blah, 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 all the FUD, now he's on the other side. And so what that does is it gives these older people the freedom to go ahead and invest in it. And more importantly, I would say it gives asset managers, so fund advisors, investment advisors, financial planners, they now have no career risk putting their clients in Bitcoin, especially if this gets approved and by the SEC. There is a huge wall of money that is just waiting. If I remember correctly, the baby boomers have about $72 trillion in assets, and almost none of that is currently sitting in Bitcoin. And so I think that this will bring a flood of money into the Bitcoin ecosystem. And obviously, if it does, the price will go much higher.
I mean, yeah, I agree with you on all accounts there. And I think this last Thursday, I did a video on the BitLab Academy YouTube stream, and the thumbnail and the title is essentially, it had an image of BlackRock and it had a stamp of approval and then the Bitcoin symbol. And I think some people might mistakenly have thought, oh, this means a BlackRock ETF was approved. No, that's not the point. I think exactly what you just highlighted, I think, is one of the most important factors, that the space, a lot of the space, especially people waiting on the sidelines, and then people that have been actually had an adverse sort of awareness or the wrong awareness, a fudded sort of awareness of the space that was manipulated by all the banks over the last 7 years. You know, I think to your point, BlackRock was discussing how Bitcoin, all it was an index for money laundering. Well, funny, now they're opening an ETF for Bitcoin. So did that change, or now they just trying to change the narrative so they can participate? But the stamp of approval is I actually in some ways think is more important than the spot ETF, because it marks a seismic shift in the global financial marketplace and saying, okay, Bitcoin is something that we can all participate in. So everybody start your engines, start getting aware, especially small family offices. As you said, you know, however many trillions of dollars are out there. I pulled up on my screen on that stream last week, just a list of the top 65 assets under management holdings in the world. And, you know, it took to get down to number 60 before it was under like $1 trillion assets under management. So, and that's just the top in the world. There's probably more money combined with all the small family offices all over the world than there is in these, you know, this disproportionately large holdings of these big companies. So to break this back, let's take it back for a second. We're kind of talking, and I'm aware of this. We have to take a step back for the beginners out there. What does this mean for price in the next 3 months? Okay, how do we trade this? Should we trade it? Is there a timeline? Is there any sort of thing? Is there any sort of date on the horizon that we should be looking to, where it's a buy the rumor, sell the news? Because, you know, we saw when the BITO ProShares Futures ETF launched a few years ago, that also marked basically near a top. So is this going to somehow potentially have the same effect or not, because we also have the halving coming up? How do we make sense of this when we're trying to invest and trade this, especially for a newcomer?
Sure. So my first recommendation would be don't trade Bitcoin, right? I think of Bitcoin as the ultimate savings technology. And this is my famous quip is, you don't trade your checking account or your savings account. You shouldn't really trade Bitcoin. I'm a big believer in just stacking sats, right? So whenever you have free cash or whenever you have trading profits or investment profits, consider putting that into Bitcoin, and that will serve you well for your life. If you insist on trading, and tons of people do, right? So if you insist on trading, a couple thoughts on this. First of all, I think it's important to understand, I think the Bitcoin bull market started basically in December of 2022. So we hit the lows in November. And then I think that is the beginning of basically a 3-year bull market if history repeats or rhymes. And I do think that it will rhyme probably. Sorry. So what does that mean? So from me as an investor and as somewhat of a trader, anytime you're in a bull market, dips are for buying, right? And just like if you're in a bear market, rips are for shorting. So I think we're in the dips are for buying stage of where Bitcoin is right now. For BlackRock and for the ETF approval, so they resubmitted their stuff, right? They resubmitted their application because they needed to name Coinbase as the exchange that they were going to be using for their surveillance sharing agreement. They just resubmitted that, I think, at the end of June 30th. So that gives them, I believe, a 45-day minimum window for the SEC to respond. But they also have many months. I can't remember, 6 to 9 months or so they have to make a final decision. So they could
I believe it's in February. If it might be before that. It's like that
well,
was like the
I think it's I think it was either March or April, but then they delayed and resubmitted it, so it may even get pushed into May or so. So, anyways, whatever it is, one of us we're in the ballpark probably. It could be as soon as mid-August of this year, or as late as basically next spring sometime. So hard to trade that kind of stuff, right? I do think though that for the way most of these things have worked in the past, it does become a buy the rumor, sell the news. So if we see stuff leading up to it, like, oh, people are getting excited, oh, we think that an approval is going to happen from the SEC, I would expect the price to rip and then probably take a break after that on the day that it gets approved. But if they just kind of come out and surprise us, say at 45 days, nobody's really paying attention to it, it's not in the news, and the SEC just comes out and says, hey, we approve this, that would be a huge shot in the arm to the upside for the price of Bitcoin for sure. So there's other macro indicators to take into account. I know we've talked about this on your show before on Twitter, but I think about things like liquidity. I watch that very closely. What's liquidity doing in the US? What's it doing worldwide? I do think that drives asset prices. It definitely has been a driver of Bitcoin in the past, and I expect that to continue going forward. So I'm happy to dive into that a little bit if you want to too.
Yeah, we can definitely dive into that. I think just to continue on this thread for just a moment longer, there's no right way to really participate in investing because everybody has a different time horizon. Everybody has a different risk tolerance. Everybody has a different level of ability to manage stress. And to be honest, I would argue, even with BitLab Academy, we teach, all the different tenets from the psychology, your inner operating system, to what's the action plan to put in progress when you're trading. I honestly think that the far majority of people probably they're jumping onto a ship that they're trying to run before they learn to walk, right? And so I think the majority, a lot of the people in the digital asset ecosystem disproportionately hold riskier assets, which I'm not going to make a comment about that everybody has their own sort of strategy, and most people actually don't have a strategy. They're just throwing money at the wall. And I want to help influence. I don't want to say influence. I want to help encourage people to do a little bit more diligence in what they're looking at. But when we're thinking about the ETF right now, and of course this has a major impact on Bitcoin, how should we be considering this also in the context of the sort of not even veiled uncertainty, this absolute uncertainty that's sort of pervasively just like putting pressure down on the altcoin market because of this question. We don't need to get into a debate about what a security is about altcoins, but it's a clear sort of pressure on the market right now. Will this be something that's going to disproportionately help Bitcoin and ETH? And we're going to see those dominances go up while the rest of the altcoin market falls? Or is this going to be something similar to previous cycles where Bitcoin runs, then ETH runs, and then we basically get this somewhat delayed or laggard alt season, whatever other narrative is out there next after that? Like, how is this just a Bitcoin, Ethereum focused time frame right now, or how should we be looking at this?
Part of so yes, and I'll say yes and sort of. So the yes is when the SEC laid out their cases against Coinbase and Binance, as everybody knows, they basically listed 4 things that were sort of free of worry, right? So people suddenly are less worried from the SEC's perspective about Bitcoin, about ETH. I think it's Bitcoin Cash and maybe Litecoin, or I don't pay attention to those things, but I think those are the 4 that kind of have these are okay for now. Kind of assets. So will they run? I would expect them to run higher and faster and first because of that regulatory clarity. We've talked about this as well before. I've been warning for like a year to year and a half, like be very careful for those. I'm a former, I like to call myself a former degen crypto trader. I use that term affectionately back in 2016, 2017. And then I basically, as you know, focused primarily on Bitcoin since then. But what I'm telling people who are still in the crypto space is just be careful, right? There's a lot of uncertainty out there with the SEC. We don't know how these cases are going to go. There's the litigation against Grayscale, and then the litigation, obviously, against these other exchanges that we talked about. It's possible that they will come down with the hammer. And why is that important? Because that means there won't be a big crypto bull market, at least here in the US, right? So what that's going to mean is that some cryptos will get shut down. Others will basically be forced out of the country and move elsewhere. Now, there'll probably be another large market in the rest of the world that people can go ahead and trade on. But it's not just this sort of guarantee like it was in the past years. So I just warn people who kind of follow like Bitcoin dominance relative relative to cryptos, which I don't think is a useful classification personally. But that past pattern that people are used to may not happen this time around. So full circle, be careful. And again, this comes from me. I'm an asset manager, right? Nothing I say is an investment or trading advice, and I have to clarify in everything I say with that statement. But just be careful. Be a little bit conservative. Please don't put your life saving in some crypto because you're sure that what happened 4 years ago is going to happen again this time around. It's possible that it won't happen, and only a select few assets will make it through the SEC's scrutiny and the regulators. If they come down hard, I think that's going to be really rough for kind of the rest of crypto.
I mean, I agree with you wholeheartedly there. I'm not fully in degen recovery mode. I still play quite, I still play in the dirt, but I have my diversification set up as such that I feel comfortable, with the 15 to 18%, depending on what part of the month it is and what's going on in the market, of playing in. We can call them degen plays, we can call them alt plays. It's all the same thing. We are betting on the delivery of something that most of these altcoins have not even delivered yet. So in reality, we're like speculative VCs on leverage, So everybody, all of us need to take better care of our personal portfolios so that if we're looking up to somebody that's made it, then we also need to mimic some of the patterns that they did to get there, which is risk management along with taking calculated risky plays. So, I had a question for you and I completely forgot what it was. I don't remember, but I don't remember what the question was, but we can move on from there.
All right.
The market. Everybody, okay, this is what the question was. So the question was, now that we are seeing an increase in institutional interest, definitely without question on the surface, being sparked by the spot ETF filings and refiling. So the filings from BlackRock and then the refilings from ARK, and we got Grayscale's got their hat in the ring. We got Invesco. The list is only going to get longer. And when the first domino falls, it's going to be very quick that there's going to be a lot of institutional involvement within the space. So as you just said, I'm curious your thoughts because it's not going to look like last time. I know people always say, the history, tends to rhyme, but it doesn't repeat. But will this time be different? Because there's going to be different liquidity and money market pressures. And also from one of the people on our staff here, Tim's TA, he mentioned about 1.5 years ago, and it's always stuck with me. When retail misses the boat, we miss the boat. When institutions miss the boat, they pull the boat back and get back on it. So are we going to see a scenario, I don't want to call it similar to 2015, but in terms of price action, we had a lot of basically almost sideways, but push-ups and then pullbacks. We didn't have that giant push-up to the golden pocket like we did in 2019. So is there any way that we can even look between now and let's say whatever the next all-time high is, whether it's in 2024, 25, anywhere in that time frame, as institutions come in, is a price going to be, I don't want to say suppressed, but is there going to be further choppiness to the downside, giving those different institutional players more opportunities to get in at those lower prices? Or is it going to be a runaway train because all the liquidity is pouring in?
Yeah, great question. So let's see, there's a couple of different ways we can approach this. First of all, hopefully I won't forget what I'm going to say, but first of all, I'm very bullish this time around because of the institutions and the green light that we were just talking about with Fink. Okay, the SEC could say, you know what? No, we're kicking out all of these applications. We still don't like, the same things we talked about before. There's still too much fishy business going on and shady business. And so we're not going to approve, even though it's BlackRock, we're still not going to approve any of these ETFs. And that would be a huge net negative, right? The price would be affected, at least in the near term, if you're a price guy.
They will provide good opportunity probably to buy again.
Good buying opportunities, for sure. Okay. Why am I really excited this time around, though? A couple of reasons. One is that, to your point, in the past cycles, institutions were not allowed into the game, right? So they were not able really to invest in Bitcoin. Why? The infrastructure wasn't there and the regulatory clarity was not there. This time around, I think Gensler has been extremely clear that he views at least Bitcoin as, look, it's not a security, it's a commodity is how he views it, right? I just view it as energy money, whether that's a currency or a commodity still, or that's the debate that needs to happen in the Bitcoin space. But institutions finally have the built out infrastructure to participate this time around. On top of that, the amount of liquid or available Bitcoin on exchanges that people are willing to part with is actually shrinking, and it's shrinking rapidly. There are more people dollar cost averaging, even just the little plebs, right? These little individuals that have one or less Bitcoin in their accounts. Every day or every week or every month, they're buying more. They're eating up all of the available supply. So as the institutions get excited about it and start to get on board and introduce their clients to it, that's going to put a ton of upside pressure on the price. So that gets me extremely excited. Now, to temper myself, liquidity. Liquidity has been kind of rising since it bottomed since the fourth quarter of 2022, but it's not really ramping up, right? The Fed is not doing just all out QE. I would call actually what they're doing currently stealth QE disguised as QT.
It's like a liquidity relief rally before there. There's a lot of different ways this next year could go based on some decisions with people. Let's be honest. A lot of us are like, you're making the decisions here? Okay.
Yes. And that gets us talking about macroeconomics then. So there are a lot of weaknesses in the economy still, right? The yield curve is still massively inverted. That is not a sign of health for sure. Banks are still massively struggling, and they're still using these liquidity relief lines that the Fed has in place. And then on the other and manufacturing from a US perspective is in a deep contraction right now. Manufacturing is just totally in a recession, both in the US and around the world. But the economy still keeps hanging in there. Unemployment still is remaining low, and the services side of the US economy is actually pretty strong still. We just had a blowout ADP jobs number today too. So why do I bring all that up? There are lots of diverging things to consider right now, and I'm basically crabbish. So I'm not super bullish right now. I'm not overly bearish. I just think choppy sideways in terms of liquidity and in terms of the economy, and then how the asset classes follow suit. I think that's kind of the best that we can hope for the coming 6 to 12 months. So you had asked early about price targets, which I hate doing price targets, by the way, because it's sort of a fool's errand to try to predict the future. But I do have two things that I use, and one is kind of where will the price be of Bitcoin at the time of the halving. The halving right now is expected towards the end of April of 2024. So I believe that's 10 months away or so. Yeah. Maybe 9 months. I have a price target of about 40 to 45,000 right now. That's pretty good, right? We're sitting at 30,000. That would be about a 50%-ish gain from here. That's pretty good. But I tell people that, like, first of all, that's great in terms of stocks and bonds and other kind of traditional assets that I invest in. I would be ecstatic, and so would my investors if it returned 50% over a 9 or 10 month time period. And then so that's number one. So temper your expectations. If we do have a big run, which wouldn't surprise me, into the end of this year, we might hit all-time highs this year in Bitcoin. Maybe we get 70 or 75,000. I don't know. But I would actually be bracing for a pullback at that point, because I think it would have gone too far too fast at that point. Similar to what it did back in 2019. Everybody got excited about Plan B's stock to flow model, and that really caused the price to rip higher. And then it pulled way back, and then it ended up dipping down to like 3,000 almost during the 2020 COVID crisis.
My favorite thing about that model, and it's a perfect example of humanity, especially online. So many people were so mad about that model being wrong because of how the standard deviations below it was. Nobody once ever mentioned that it was even possible that it was wrong when we were many standard deviations above the mean. Right. So it's funny how it's wrong if it's below, but it was actually further separated above. So which one is it? And I think, in all honesty, you brought up on one of the Crypto Answered podcasts we do on my Twitter, that I believe it was you, that, even when we're doing measurements of where the projected next all-time high could be, using fibs or however we want to do it, the $64,000 top and the $69,000 top, which was a top, that's the one debate. But then the second consideration, and interestingly, I hadn't heard anybody else bring it up, is that the market very likely could have got to those levels, maybe not way past 100, but I argue that it probably could have gotten to that $85,000 to $100,000 range had the Chinese mining ban on Bitcoin didn't come into place, because that changed the entire dynamic of the space. And then here we are now, where we're trying to argue about the pre-halving push-up, pre-halving pullback, and then a continuation, but we also never had I guess we did have the hope for an ETF before, but I think that we're closer to the likelihood of having a spot ETF than ever before. And as you said, the infrastructure is in place, and awareness, I think, is at least a base level enough for this to happen. And this very well could change dramatically the liquidity that could flow in pre-halving. So could it get to all-time high? I'm not gonna say that because people will crucify me. But you're right. And Scott Melker, by the way, Wolf of Wall Street, he pointed out, most people right now, if you don't want to deal with the stress and you're not an active professional trader, you can likely stick your head in the sand until sometime around early spring. Whether price goes down and comes back up or goes up and comes back down, we'll probably find an equilibrium somewhere in the $27,000 to $35,000 range, $27,000 to $40,000. So you can kind of save yourself the stress. But if you want to trade that volatility, remember, get into BitLab, learn about it. But yeah, just so much to consider right now.
Yep, absolutely. And to your point there, and Scott's point, this is a great time to be dollar cost averaging. I know it's not how traders do it, but for the other 99% of people out there, it's so smart to just don't worry about volatility. You know, if the price goes lower and you have your dollar cost averaging just set on autopilot, you're actually excited when the price goes down instead of stressed out about it. So yeah, that's how I counsel people. Like, if you want to get into Bitcoin, take your time, don't stress out about it. We have probably another 8 months, 9 months, 10 months or so where the price is probably just going to be real choppy. And so don't get caught up in the emotions of it, because the problem with, if you get emotional in your trading or you're investing, you always sell and buy at the wrong times, right? You get greedy at the top and you get terrified at the bottom, and those are the exact opposite of what you should be doing. So when you feel terrified, when you feel stressed out, that's usually the best time to be buying, and vice versa. When you're elated and feeling greedy and you're making plans for how you're going to like quit your job and become a full-time trader because you're so good, that's usually about the time where it's about to roll over and head back down again. So stay humble, stack sats, as they say, you know, in the Bitcoin community. And yeah, we'll be talking about higher prices. You know, I think by the time we get to 2025, it's going to be a completely different world. I think by that point, the recession will be kind of in our rear view mirror. And I think QE, the next, whatever that level is, will be in full effect at that point. We won't be wondering if the Fed is supporting the markets. We won't have to like have people like me studying closely to see if there's some stealth QE happening, even though they're talking about quantitative tightening, which I believe, by the way, is happening. But we'll just be in full blown QE mode. And I think it'll be off to the races for Bitcoin for sure, as well as other risk assets.
No, I definitely agree with that. And it's amazing, since, let's just say the date, and everybody knows what I'm talking about, since March 2020, it's not just a digital asset ecosystem, crypto. It is the entire financial global sector. Nobody has an answer. Stanley Druckenmiller is just like, listen, if I don't know, nobody knows. And it's true. You know, we had a complete shutdown of supply chains. We had, you know, people out of work. We had stimulus come in, and everybody's trying. And I would argue this is still the right thing to do. When you're not sure what's going on in a chart and you're looking at a 4-hour chart, zoom out to the daily, look left. Zoom out to the weekly, look left. Zoom out to the monthly, look left. The left gives you at least some sort of idea, some price ranges to look at. But when we're looking at metrics and data, economic data in terms of jobs reports, by the way, culture has changed. People want to work from home now. People are doing independent, gig work, Uber, DoorDash. How are they even measuring this? So my question for you in this, being somebody that's an asset manager that's also involved in crypto, and this may be incredible hard. You might already have this on the tip of your tongue. For somebody that's not an economist, which is basically every single one of us that's watching you, and I'm not saying you are an economist, but you understand the data because this is how you're making the decisions for the assets you have under management and also for your own portfolios. What's like a 3 or 4, like this is what you need to look at just to get a basic overview, and why? What can help people get some sort of edge in the digital asset ecosystem looking at traditional data?
Sure. So I do feel like the price action of assets, basically anything that's considered a risk asset. So private equity, stocks, not really real estate, not really bonds, but those kind of things. And stocks, we have to divide out growth versus value. So more growth stocks, technology stocks, Bitcoin, and then the whole digital asset space after that are all kind of out on the risk asset spectrum. They are strongly influenced by liquidity levels. So I bring that up and I talk about it a lot because that's the number one thing I look at, and I think most investors should look at, is liquidity in general, both in the US, which is kind of the king thing to look at, and then all of the rest of the world liquidity. Is it expanding or is it contracting? If it's expanding, generally that's a time of risk on actions. And if it's contracting, it's generally a time of risk off. So from the end of 2021 through October of 2022, liquidity itself was contracting. And as we know, right, everybody who lived through that, everything basically took a hit. So, growth.
I'm gonna hold your feet to the fire here for a second. Yep. Because I think all of us forget this, especially it's way more so in the digital space. Every time the market moves $1,000 in Bitcoin, the ecosystem grows by X%. And when we have a bull market, then we disproportionately have the large majority of people in the space actually new. And especially within the digital asset ecosystem, the majority of those also have very little experience in the traditional asset ecosystem. So I think we all just, I want to remind us all just to throw a rope back for people. So right now you're talking about liquidity. Can you pull up a chart, and where does somebody find that? Obviously on TradingView, but what's your go-to metric to look at that, and how do we utilize that when looking at what's going on with Bitcoin?
Sure. So great question. It is. So I do use TradingView, but what people can do, just regular people. So the Fed has a site called the FRED site, or it's the St. Louis. Here, let me get it. fred.stlouisfed.org. You can go there, and that's where the Federal Reserve puts all of their data, all of the stuff that they do and that they care about is on there. So it's a wealth of information. It's super boring for most people, but if you want to dig into these kind of granular things, I don't really like most of that stuff because it's mostly academic. But what I'm interested is that intersection where what the Fed's actions and the government fiscal policies affect me as an investor and affect my clients as an investor. That's why I care about that. So what you can do is you can go to that site and you can actually type in and you can look for things like, one is called it says assets, total assets, less eliminations.
Show it to me, baby. Show it to me.
Oh, okay. Can I do that? Let's see. Share my screen.
Show me what you're working with.
Let's see if this will work here.
And as you're doing that, I'm going to kind of throw it over to this screen right here. Make sure, everybody, that you come over here and give Dr. Jeff Ross a follow. It's right here at Vailshire Cap, which is VAILSHIRE Cap. He shares a wealth of information on here on a daily basis. He also does a lot of spaces. He's just an excellent resource to check into. And if you haven't yet, make sure you go over and check out bitlabacademy.com. We got a wealth of information. There's also a free beginner's course for anybody that's just trying to figure out what the heck is blockchain, what is Bitcoin, just a general beginner's course. And then when you want to take it further, of course, we have all this other content and growing on a daily basis. So make sure you check all that out. And I'm going to throw it right back over to you now, Dr. Jeff Ross, now that you got your screen up.
Okay. Can you see this then?
I can. Yes, sir.
Okay. So this is this site I'm talking about. It's the FRED, stlouisfred.org. You guys can all go here, and then you can use a search bar to get in these things. So what I recommend people is, like, if you can just you can stop the recording here, take a screenshot of this kind of thing and put this into your browser and look up these charts. So this is part one of when I'm talking about net liquidity. So this is the Fed's balance sheet. Basically, you can see over time, these are the amounts of assets that they hold. So it's things like treasuries and mortgage-backed securities and the levels. These are, so when we see 4 or 5, it says million. So think of it trillion, right? So 4 trillion, 5 trillion, 6 trillion. Right now, we're sitting at a level of about $8.3 trillion in assets that are sitting on the Fed's balance sheet. So when they say they're doing quantitative tightening, that's what started right here in 2022. And you'll see this is starting to roll over and head down. That's them tightening. So they're letting bonds mature and roll off of their balance sheet, and mortgage-backed securities roll off. That's considered, in their parlance, tightening. So I'm going to do a more close up here. Now we're looking from 2021. Here you'll see the spike. This is when we had the regional bank crisis that everybody was panicking about in March, and they opened up the bank term funding program. These are regional banks that needed emergent liquidity. So they're like, hey, we have all of these just crappy bonds that are long dated on our balance, on our books. and we have our depositors are fleeing. So we need cash right now for these terrible bonds. They decided to use the bank term funding program, and it caused the Fed's balance sheet to increase. So that's number one. And that's just a quick overview. Do you have to then subtract what? Let me get to the second thing to consider is what is the overnight reverse repo market doing? So this is another thing. What happens is money market funds, they park their money in, it's completely risk-free. And the Fed in return gives them a rate on their collateral of currently 5.05%, totally risk-free on this overnight rate. So what we see here is that this peaked. Actually, it peaked more accurately here on September 30th at about $2.4 trillion, if you can see that right there. And then there's this little peak, but this at the end of every quarter, it always jolts up. So that's sort of, it throws you off a little bit. But so this is what I consider was the actual peak. That means as the overnight reverse repo market is increasing, that's sucking liquidity out of the system, and it causes risk assets in general to do poorly. As that starts to go down, that means this money is coming out of there and it becomes investable again. So that's actually, as it goes down, that's positive for risk assets. It's liquidity expansion. Okay, so you guys have that. And then the other one that's important is the Treasury General Account is this one. Okay, so this is what is the Treasury General Account balance. Notice it didn't really do anything interesting for decades and decades, and then it got interesting back here. So 2019 and then into 2020, it spiked up. What people were concerned about with the debt ceiling debacle that we just had, where Congress just finally approved basically the no limit, the no ceiling resolution for debt. That was approved at the end of May, beginning of June. Here, let me get here a little closer. Okay, so where are we here? What I like to use is so the Treasury General Account balance got down to close to zero. So how do they get money? Tax receipts, right? So when you have to pay your taxes at the end of the year, that fills up the Treasury's checking account. That's what this thing is basically. And when the Treasury has to pay out money, like so here the balance is going down, they're paying money out, and that's money that's going into the system. That's considered liquidity positive. It's an expansion of liquidity. When the Treasury General Account fills up, that's sucking liquidity out of the system, and it's a net negative for risk assets. So you guys can all look at that, and when you put those three things together, you watch those balances, and basically if you can depict if liquidity is flowing into the system out of the government's hands into the private sector, that's good for risk assets, and then vice versa when it's flowing into the government coffers and it's flowing out of the private system, and it's bad for risk assets. So hopefully that makes sense. It seems esoteric, but it has astonishing implications if you get used to it, because stocks, especially NASDAQ stocks, Bitcoin, and then related digital assets tend to follow what net liquidity is doing.
I agree wholeheartedly. It's one of the things I look at. I'm not sure if you've ever seen it. I'm going to go ahead and share my screen with you and share it with the audience as well. And that's this right here. Let me go ahead and throw it up on for everybody. This is a chart from the Rational Root, and essentially it's an aggregate of the global liquidity. And similar to what he is showing with the Fred, which is a free tool. The best way I like to describe it to people, if you look at the global liquidity and you follow the general trend of Bitcoin, is Bitcoin, and this is a never-ending debate people do have, is the Bitcoin bull cycles fully tied to the 4-year cycle of the 210,000 block halving cycle, or is it tied to global liquidity? Or was Satoshi Nakamoto so brilliant that he put the halving cycle on a schedule that somewhat mirrored what was going on with the global liquidity? Because we see liquidity down, market pullback. We see liquidity up, market push. We see global top in liquidity. We see top in the market. And similarly right here, this is the most telling, the crash of FTX. This is it right here. And we had a huge, if you want to talk about divergences in RSI, fine. The best divergence you'll ever find in markets ever is if you're putting fuel in a car, would you bet that person's going on a road trip or not? They're not going to put a fuel in their car just to let it sit in the garage. They're gassing up to go somewhere. And we're seeing this liquidity spike over this long accumulation period, which long, I'm saying it's actually relatively short, but long in essence of how much liquidity was coming in before we truly got the pop. But let's consider on this downtrend right here, how many cascading failures we had within the digital asset ecosystem, from Celsius to BlockFi to Voyager to Terra Luna. And then finally, there's more as well, but then Three Arrows Capital and then FTX. There had to be a little bit of a base and trust built, right? And then finally, the liquidity has said, there's fuel here to now start spreading into risk, and we see this coming up. And then, oh man, the market's pulling back because it's on schedule with the pullback. Well, is it, or does it have to do with liquidity? And I really want to echo what you're saying there. I really want to echo what you're saying, Dr. Jeff Ross, because at the end of the day, if we're not paying attention to the fuel, then how do we know when we have enough gas to go somewhere? And that's exactly what people need to pay. It's honestly one of the biggest secrets, I think, in technical analysis is liquidity and volume. And people want to, and we sell indicators ourselves, and indicators are great. But if you're not first looking at price action, liquidity, and volume, then the indicators will do nothing for you because you're not looking at the basics first. And every pro athlete will tell you, Tiger Woods, Michael Jordan, LeBron James, they all had coaches every stage of their career to practice the basics.
Love it. Love it. So that was a really long, that was, I think, the first thing I look at, right? You're asking what kind of indicators. So liquidity, to your point, I think is really, really important to look at. The one caution I have against this is, I will say, I've been talking about this for a while. 6 to 9 months ago, nobody else was talking about liquidity. Most people didn't know what it was. Now I hear people talking about it all the time, including on even like the CNBCs and the Bloomberg. They're talking about it regularly. I see Twitter people talking about it all the time. So the more people who talk about it, it's possible that the effects of it will start to wear off. People may start front running it. It may not be as powerful of an indicator as it has been in the past. So just something to consider. And then I'll move more quickly on the other ones. What other indicators? I follow the bond markets. I think the bond investors in general are, are smart. They're aware of what is going on with the economy, the engine underneath the hood sort of thing. So the fact that the yield curve, like the 2s and 10s, are still inverted almost 100 basis points. It's down to 97 basis points as we speak. That just signals ugliness. That means there is still trouble ahead in the economy. We're not necessarily through it yet. In fact, I would say the recession hasn't even really started yet in some sectors. And so we still probably have trouble ahead of us. So that's why I say, even if we do get a nice run in, say, Bitcoin and risk assets into the end of the year, I would be a little bit nervous about it, that we're going to have a pretty substantial pullback. It wouldn't surprise me if at some point, because if for people who remember, I'm older, so I remember these things, but 2008, the end of 2008, people were talking about that. At first they thought, okay, maybe we're through this. Maybe the Fed did their stuff and the economy is strong and we're going to pull through this. And then it's like the floor dropped out and everyone was in panic mode and businesses were collapsing. And, the Fed was having regular meetings and the president was calling because what is happening to the economy. There's a chance we could get to that kind of moment at some point. But the more I study my things, I think we're still at least a couple of quarters away from that, probably. I've been saying it could be a Q4 of this year or Q1 of next year. Even that is starting to get pushed more. It seems more like now it's not going to be until 2024 that we have this recessionary bear market. So enjoy the gains while you're having them, the sideways to up movements, but just understand that there may be kind of a floor dropout moment. And if you want to trade through that, fine. But I would recommend, again, just dollar cost average. Don't pay too much attention to it or you'll freak yourself out. And so go ahead.
No, I mean, there's just so many juicy nuggets of every part of the conversation here. It's so good. And I want to challenge everybody that's watching this, whether you're watching this on BitBoy Crypto, or if you're watching it, the full length version of this interview on BitLab Academy, I want everybody to dive further into not wanting the signal of exactly when to buy or what's the price target. Ask, how did you get there? How did you arrive at the decision that has brought you a larger portfolio consistently over time? And typically it's patience, one, and due diligence within that patience. And sometimes it's waiting for a month, a year, 5 years. But if you jump in because you're emotional, you're doing the first thing and the worst thing that you could do if you're trying to grow your wealth. And that's acting emotionally, because these markets are not meant to be friendly. You can trade in the same market your dad is trading, and he may take money from you, even though he loves you, and he doesn't know it because he's trading on his nights on the weekend. You're trading on a Tuesday, but maybe he's more patient. And in addition to that, it's one of the only spots it's one of the only ventures in the world that we can all participate in, to where you could be an absolute newcomer off the street, and by merely buying an asset, you are competing with not only the world's best of that ecosystem, but also advanced artificial intelligence algorithms. I can speak too. Algorithms. But if you are emotional, you're doing everything that the pros and the computers have trained themselves to do to extract money from you. I think it was Warren Buffett who said the markets are designed to take the money from the impatient and give it to the patient. So I just want to really, really encourage people to keep watching stuff like this, but watch other people too. Do your own research and really dive in to building a strategy that works for you based on your own risk tolerance. So we're coming up on about 45 minutes here, Mr. Dr. Jeff Ross. Is there any other topics you feel like we should cover? You know, is there any other TradFi signals we could look at when we're looking at Bitcoin, or even a word of encouragement? Anything you want to do to wrap us out here in this last 5 minutes?
Oh man, how to bring it all together.
What's the signal? What's the price target? I need to know.
Price target, right. I will say, I will. No,
Yeah.
no, I'll actually throw this out there because you brought it up, and we had talked about this in spaces previously. I think that the 2021 cycle was cut short. I do think the price of Bitcoin was headed to six figures. But because it was a very real insult to the system to have China basically ban miners, literally the hash rate went down 50% in about a month. That's a crazy blow to the system. But then it recovered and it tried to make one final push higher, tried to go parabolic, but by then the economy was rolling over, liquidity had rolled over. It didn't really have a chance to get much higher than that. I bring that up because I don't think that should be your precedent for what's going to happen going forward. And especially bringing everything all together, the institutions could be here this time around. They have the infrastructure this time around. They may have SEC approval with these spot Bitcoin ETFs. And then on top of that, the liquid supply, the available supply of Bitcoin is decreasing for the first time. It peaked at the third halving. And then since then, the available supply has been decreasing at the same time institutions are starting to get on board. So I think if there's any surprise this time around, it could be to the upside. Again, not investment advice. You know, I'm probably going to be completely wrong, but I will be disappointed if it's not at least 200K by kind of the end of 2025. And it could be much higher than that, like multiples higher than that. And so just keep that in mind, you know, and just remember what we're here for in the long run, right? You know, Bitcoin is designed to be secure, decentralized money that is of the people, by the people, for the people, versus government fiat currency, which is of the government, by the government, for the government, meaning the government is extracting your purchasing power the longer you hold dollars, but you're actually increasing your purchasing power. At least that's the design, the longer you save in Bitcoin. So if I had any parting thoughts, it would just be, don't worry about all this stuff. Don't get too emotional about this stuff. Just save your purchasing power in Bitcoin and it will treat you well over the years and over the decades.
So with that being said, I have to ask you, we have institutions, we've talked a lot. By the way, anybody that's watching this portion, if you want to see the full interview, make sure you're checking into BitLab Academy's YouTube page, youtube.com/@BitLab Academy. But and that is institutions. I mean, we're closer to being on the cusp of it really happening with the spot ETFs and the stamp of approval that we've gotten from BlackRock foraying into the space, and also in addition to that, kind of backing it up with a bit of a PR campaign, vocally saying globally, "Hey, it's good now. Everybody hop in." Moving forward, looking into 2025, potentially 200,000, whether it's 140, whether it's 300, regardless of what the number is, as institutions come in, I think a lot of people are wondering, is this also going to bring in a different characteristic to what potential tops could be because of the lack of fair value accounting within the space? Are these asset managers going to be basically taking profits into tops, or are they going to be large in part long-term holds that are holding through the top and then buying at dips? Or how can we even estimate what the what the strategy is going to be on these market swings with these large asset managers, because that could have a huge impact on what price actions is going to do.
Yeah, that's the tough thing. And I will say that human nature is cyclical and emotional. And so I think markets will always be cyclical and emotional. So will we still get cycles? I think so. And again, so my range, and this is a huge range, but I have kind of a 200K to $1 million by 2025, the end of 2025 for Bitcoin. I think at some point people are going to sell off, and I still think that we'll probably see another maybe 70% sell off after that. So you can kind of just multiply 70% to either $1 million, which would put it down to 300,000, or if we only hit 200K, that would maybe mean we'd go all the way down to like 60,000 by the end of say 2026 if these cycles continue to hold. I think that's going to continue. It may not. There's talk in Bitcoin circles. Obviously, I'm in those kind of the maxi circles a lot, talking about hyper Bitcoinization. Will that actually happen? I think it's too early for that to happen. But you always are taking that chance. If you're selling at whatever price, you might not be able to get it back for a lot cheaper than you think you can. So I would just again say be very careful about trading this, because you may end up owning less Bitcoin at the end of that and have less purchasing power at the end of your trading fiasco. So
last question for you here is everybody, there's a long running sort of narrative in the space about the diminishing returns and volatility that we're seeing in Bitcoin over time. Do you think that whether it's this cycle or the next cycle, I can't imagine it being, the third cycle away from now. If it were to happen, I think it would be in the next cycle or the following cycle, being that we have at least one of those cycles have a bull market that outperforms the cycle before due to the liquidity flowing in. Say we get the perfect storm, even at the end of this year, where regulation gets sorted, at least for Bitcoin and Ethereum, spot ETFs start dominoing and becoming available. The narrative now, with this campaign that's starting with BlackRock already, to let people know this is okay. It's an international asset. It's basically getting that stamp of approval. Do you think we will have at least one cycle that will outperform a previous bull cycle, or do you think we'll keep rounding out in that rainbow graph that everybody looks at?
No, I do. And that's why I was laying the groundwork with the institutional investors coming in. I think last cycle, the one that peaked in 2021, was the disappointing one. And I think the next one, probably peak in 2025, will surprise, I think, to the up. If I had to, gamble on it, I would say I would take the over on that it's going to go above what most people think. So if it's ever going to break out to the upside of the rainbow chart that you're referring to, it would be in 2025. And this is the cycle to do that, I think. Then at some point, will we see diminishing returns? Sure. It can only, you can only reach so many trillions of dollars before, it's hard for it to continue to perform the same way. But again, because it was so disappointing for legitimate reasons last cycle, I think this is the cycle to be excited about. Could be wrong. I'm not making predictions, right? And this is not investment advice, but that's how I view it. I think we're going to be surprised at the upside this time around.
I mean, I completely agree. We think about when the market cap was 10 million. I was not in the market at that point. I wish I was, but when we went from 10 million to 100 million, that's a 10x. It only took $90 million to get there. We're at 590 billion now. So even to 2x, we would need 590 billion more dollars to be injected into the marketplace, in addition to people holding through that, right? So we've got a lot of work ahead. So I just want to say, everybody, be patient. Dr. Jeff Ross, I really appreciate you coming on. Is there anywhere people should find you? I pulled up your page, but is there any other spots that people should be looking for you? Anything you got coming up?
Sure. So I'm on Twitter all the time. My handle there is @VailshireCap. And then if I'm also an investment advisor and a fund manager. So if you want to learn more about that, you can send me an email at info@vailshire.com, or I have a webpage for my company called vailshire.com. You're welcome to check it out.
Oh, that's so great. Well, I appreciate you. I'm going to go ahead and close this out. Everybody, thank you all so much for being here again. You can follow Dr. Jeff Ross right here. You can see on the Twitterverse right here, @VailshireCap. Cap. Just make sure I only spell these out for people because there's so many fake profiles of all of us out here putting out content. And if you haven't yet, make sure you check out BitLab Academy. And if you haven't checked out the YouTube page, or if you're watching this on one of the other providers we have, make sure you check us out here, youtube.com/@BitLab Academy. And just so you know, there's still a coupon code that you could utilize if you want to get involved here. Give me 30 for 30% off the all access pass for the premium Discord, as well as all of the courses that we put out. And remember, it's not just about trading. There's stuff in here, psychology of trading, what's the balance of life, because in order to operate well on the playground, you have to have a good, healthy body, good, healthy mind. Otherwise, you're not going to be making smart decisions. And we have all of that here in BitLab Academy. So without any further ado, and thank you all for watching. I appreciate you all being here. My name's Kellam. Hope you all have an absolutely wonderful day, and I'll see you next time. Adios.